Welcome back. Now, in the first quarter, listed property outperformed bonds and equities, with the SA listed property index boasting a 6% return. Furthermore, data from the SA REIT Association indicates that the sector is in a much better position than it was 5 years ago when the pandemic shook the industry. Fast forward to today, new market turmoil is at play. Will the sector remain firm during the global uncertainty? Ian Anderson, head of listed property at Merchant West Investments, who compiles the SA REIT Association's monthly chart book, joins us with his analysis. Thank you so much for your time, Ian. We're almost done with the fourth month of the year. Just to take stock of the landscape so far, what have been the pillars informing the performance of the SA REIT sector?
Yeah, so I think last year, I think just want to point out that the sector is coming off a fairly high base. So we started this year having returned 35% last year. So it wasn't like we're coming off a low base. So I think a lot of investors are surprised by the resilience of the listed property sector so far this year. Clearly, last year there were some very strong tailwinds for the sector. Formation of the government of national unity, reduced load shedding, almost no load shedding, which is very beneficial for landlords. And then also we had interest rates being cut, or the prospect of lower interest rates. A lot of those tailwinds, unfortunately, this year have dissipated. So the government of national unity is under a little bit of pressure at the moment. Interest rates are definitely not going to fall as far and as quickly as expected. And then we've obviously got the Trump tariffs and the turmoil in global financial markets. But despite all of that, the property sector has done reasonably well. Certainly better than most people would have anticipated. And the reason for that is we've started to see a fairly significant improvement in property fundamentals, which is now starting to translate into stronger distributable income growth almost across the board. It is very specific to South Africa. We're not seeing the same level of improvement in the rest of the world, but certainly given the low base that was created post the pandemic, we are now starting to grow off that base. And Growth Point was probably the highlight of the quarter. It certainly was a major contributing factor to the sector's decent start to the year when they raised their guidance. And that certainly was an uplift for the sector.
I'm going to dig into some of the key things that you've mentioned here, Ian. But now major headwinds, as you've mentioned, have reared their ugly head, giving the markets kind of the same jitters that they had at the onset of the pandemic. And the last time the property sector was one of the hardest hit. Is this nervousness comparable to then or not?
It's probably not. I think, if you think back to what happened during the pandemic, economies just shut down completely. Tenants stopped paying rent. We're not in that situation. Yes, tenants are under pressure, but they're going to have to continue to pay rent. They don't have anything to allow them to stop paying rent. So I think that's a major difference. I think also another big difference is financially and in terms of balance sheet strength, the REITs are much stronger today than they were going into the pandemic. One of the things that the companies are doing now is they've reduced their dividend payout ratio, so they're not paying out all of the cash that they generate to shareholders. They're retaining a lot of that either to pay down debt, which has been ongoing for the last 3 or 4 years, but they've also used it to strengthen their property portfolio. So they reinvested into their property portfolio. So I think financially the sector's in a lot better shape. I think also there hasn't been any speculative development activity in the property market, so we're now starting, even with just a little bit of economic growth, we're now starting to fill vacant space. We're starting to see market rentals rise. The two-pot retirement system also means that there's a bit more money in people's pockets to go and spend, although retail sales in February weren't great, but they were good in November and December last year, and that should also bode well for the retail landlords. But I think overall, the sector is in way better shape, and the circumstances around this turmoil are very different to the ones the sector experienced during the pandemic.
And really really, you look at a good company, and it's a company that, even though there might be global turmoil happening around it, but internally they try to control the controllables. And really, it's been interesting to see how these REITs have actually strengthened their strategies and their balance sheets to make sure that they are in a position to be resilient against any shocks. Are there any opportunities? I mean, although we are seeing headwinds and potential headwinds in the global macroeconomic environment, any opportunities that the property sector can take advantage of, maybe with some changes in the supply chain or anything like that? As we saw with COVID, we started to see the industrial property sector actually getting some green shoots.
Yeah, I mean, I don't think there's anything significant that's going to happen in the sector in the short term. I think at the moment, the sector is just focusing on what they know best.
Yeah.
They still have some way to go to get to where they were pre-pandemic and even pre-2017, 2018. So, they have been fairly inwardly focused, and I think that's something that has served the sector well. There has been some external growth opportunities. So we have seen businesses like Fukile, for example, expand their portfolio on the Iberian Peninsula. So they've now started to include Portuguese shopping centers in their portfolio. But for the most part, we haven't seen any external growth. So the companies have really focused on making sure that the existing portfolio was in good shape. Yeah, again, Spear is probably an exception to the rule there, having acquired a portfolio from Emira. But I do think that might be the next opportunity if there are, and given the re-rating that we saw in the sector last year, there might be some distressed sellers coming to market this year worried about conditions, and that might present an opportunity for well-capitalized REITs to buy good quality properties and property portfolios, which can be both value and yield enhancing.
All right. Well, we do have to wrap up the conversation, but thank you so much for enlightening us on that landscape of the SA REIT sector. Much appreciated, Ian. That was Ian Anderson, Head of Listed Property at Merchant West Investments.